Hello traders, how have you been? Well, it's been an exceptional couple of weeks for the index, right? Well, today is the 10th of October 2020, Saturday morning, and last night I was unable to conduct our usual evening session for the mentorship traders community, and I so thought that it's appropriate that I quickly create a video on my take on the Nifty and the Bank Nifty from a weekly perspective and share with you, and not skip the continuity of these analysis. So unlike usual weeks when I look into Nifty, Bank Nifty and then go into sectors, I thought that it is prudent enough that I should spend a little bit more time and take a deeper dig into both the Nifty and Bank Nifty, especially the way the markets had fallen and the V recovery. So in this video, I will not be going into sectors, but take a much closer look into both the Nifty and Bank Nifty. So I have the Nifty daily chart in front of you, and I have few things drawn here, analyzed here. So I'll take you step by step. Step number one, let's come to the 10,800, 10,900 zone. These were, if you remember, when the markets were coming off very sharply, in one of these videos I had created these layers of support, of which the first one held exceptionally well, and we have an exceptional bounce back. Number two, this bounce back has now taken us to the lower border of the earlier channel, which proved itself exceptionally well here. If you notice that 16th of September, we had a retest of this channel border, and after that the index corrected. And right now with this move, the index is now teasing this exact channel border. So interesting point. Second point that I would like to bring to your notice is the nature of this rally. So TradingView allows us something called a tool called info line. So if you can see here, these are these blue boxes. And so let's zoom in. This bounce back that we have in our hands right now is close to 11%. It's taken around 10 days from a low to high basis. And the angular move of this line is around 64, 62 degrees. In this recent bounce back from the, I'll just move myself to the right hand side, from the lows of March this year, after the carnage when the index decided, this is the time we're going to bounce back, we've had meaningful rallies, of which the first rally, which is primarily led by a lot of short coverings, as you can see here, over here, this to this, was the steepest. It's around 84 degrees. It's around 3 to 4 bars, and it's taken up around 20%. That's generally the case we see when a severe bear market bounces back. But a more meaningful rally or a bounce back is from the lows of 18th May to the highs of around 8 June. This is very similar to what we have in our hands right now. It was around the same 62, 63 degrees. That is the the rate at which it was accelerating in terms of degrees. It's got it gave us around 17.5% of gain in 14 bars. As of now, we have the same degree of acceleration, around 11% in 10 bars. One more important thing to note here, what I have managed to do is, if you look at the previous sell-off in that case and in current case, and then what I've done is, if you notice this red dotted line, that's my phone ringing, just give me a second. Yeah, sorry for that. So if you look at this red dotted line, this is a projection, a Fibonacci projection of this fall, and it had projected close to 127.2% up here from where it actually corrected, a short-term correction. Now if I use the same concept, then it gives me a level of around 12,050. Let's say a psychological round figure of 12,000. And finally, on this daily chart, this big black wide range of the Nifty. Now I know this is exceptionally wide, but it has been exceptionally important also. We're looking at a very wide zone for the Nifty, which has proven itself time and again in multiple months from 2019, 2020, and now back in October 2020. What do we make up of all these things? What we make up is, number one, the index has given us an exceptional bounce back. Okay. Okay, that's the phone again. I really don't understand when you actually, disconnect a call. The person should understand that I should be busy and I should call back. Anyways, jokes apart. So what we are talking about is the index has given us an exceptional bounce back, no doubt. And if you closely look into, I may remove this info line. If you closely look at the bars, especially the count of 3, 6, 9, and 10 days, exceptional, not a single low on a daily basis was broken. That's the kind of strength that the index has shown. Very good for your long-term portfolio, and it's been really bad for the swing short trades. In fact, most of my swing short trades recently have gone wrong, barring maybe 2 or 3 of them. Nevertheless, it's a market, you've got to accept this. So we are approaching psychological levels of 12K. We have run exceptionally strong. And we are now entering a zone of serious resistance. Now, will this go to 12K furthermore, 12.5K? We don't know, because price will tell us exactly what's going to happen. But we should prepare accordingly. And to prepare accordingly, let me now take you Nifty, a long-term perspective. This is the weekly chart of Nifty. This was the arrow drawn on the daily. I'll remove it. And now we can see that it's within a nice rising channel, and these are the previous highs, which the index is trying to come close to, this, and this. That's all right. Monthly, equity, Nifty as an asset class is doing very good. Come to weekly. Now in weekly, what I've done is I've drawn 3 channels. The big blue one is the big bull market, okay, the larger bull market. And there are certain lower degrees of channels, the red one and the green one. The green one is almost horizontal. The green one is holding the lows of December 16. I need to shift myself a little bit. December 16, Jan 20, and this is March 20. What is important for us to note here, that all the 3 channels are more or less, the high of these 3 channels are more or less coinciding on the similar zone, and that's again around 12,500 to 12,800, 900, 13,000 kind of levels. That's the kind of resistances we are looking at from the weekly chart as well as from the daily chart. And I'm not too surprised, maybe I need to do a quick cross check to figure out that every time these highs had, Nifty had come to these highs, maybe the Nifty P's were quite high, close to the 25 or above or 27 levels, which led to some kind of fundamental profit booking from the fund houses. Possible. Is this the case again? We'll take a look at that later. But one thing is for sure, that the index is approaching serious resistances. Now for short-term traders who likes to time the market, swing traders like me or intraday traders, now I've come to the 75-minute time frame. And in the 75-minute time frame, the first thing is this rising channel. So the first sign of any form of weakness will only come when this channel is broken. Till then, do nothing actually. You can continue to extend further up. And the 2 layers of support is close to that 11,700, 11,800. The point that there was a previous high here and there was a gap up, the index actually gapped up. So I've marked it. And the second one, which is far more important and stronger, is the 11,600, 11,620 zone. So I'll keep these levels intact and wait for the index to cool off. Now strategically, the fact that index has shown this kind of strength and gone up to a strong uptrend, trading wise, one should look to buy dips. As in a swing trader, me myself will now probably look to buy those stocks which are moved into uptrend and buy them on a dip. The view, of course, remains bullish. There is no doubt about it, but it's tired, or I would rather say it has not given us any sign of tiredness right now, but it's entering a zone where it should ideally get tired. Last time we saw that this move extended for 14 bars, low to high. We are now 10 bars old in this move. Yeah, we can have 3, 4 or 7, 8 more bars. Who knows? But probably it will slow down. I use the word probably because when this kind of move happens, you never know, 2-3 days plus minus, we should give ourselves some margin of error. Now what I'll do is, on my right hand side chart, you can see Bank Nifty. Okay, I will open the monthly chart. On my left hand side is monthly Nifty. On my right hand side is monthly Bank Nifty. Okay. Now, if you come to the Bank Nifty chart, you can clearly see the degree of underperformance. Clearly, you can clearly see the degree of underperformance where Nifty stands right now and where Bank Nifty stands. In fact, these are the two channels drawn from similar dates. The dotted line, if you can see, is the midline of the channel. Index Nifty has clearly taken out the dotted line on the upside, and Bank Nifty definitely is struggling. So it's an underperforming sector. Weekly. This is the weekly on my left hand side of Nifty, which I showed you those 3 channels, and this is on my right hand side Bank Nifty. Again, couple of channels I have drawn here. Nevertheless, they are all in an uptrend, but again clearly the underperformance showing from the Bank Nifty. What will be interesting will be once I come down to the daily time frame. There you go. So on my left hand side, you remember that we just spoke about the levels, the way Nifty has gone up. And now we'll take a look at the Bank Nifty. Now Bank Nifty, on the other hand, has a lot of supply points to take care of. Let me zoom out this chart. And if you can see, I have 3 layers of resistances drawn, of which I have not marked the top one because it's far-fetched. The first 2 are important. The first one was the previous high, which corroborates with a gap down. So around 25,300, 26,300, so big 1,000-point gap. And right above that is 26,700, 27,000. This level, the 26,700, 27,000 one, is far more important because we see typical lows that the index had created back in the past around August 2019, September 2019. And so 26,700, 27,000 is a very, very important level. But I still feel that considering we are at 23,000, 24,000, the Bank Nifty is still got a lot of distance to cover. It's still got to do a lot. And so this underperformance that we've seen from Bank Nifty needs to come up. And if you remember, we were looking at our RRG charts over the last few weeks, and the Bank Nifty, the private sector banks, the PSU banks were all in the improving sector. And now with the recent move, they've all now headed on the right towards the leading sector. So having said this, I still believe that if the banks' financials have to keep on improving and show some relative strength and then turn around, then the erstwhile performing sectors, so if I take a, let's say, 6-week performance, if you see a 6-week performance from the sectors, huge outperformance coming in from CNX IT, huge, it's like 20.5%, and the second best is pharma, which is 3.5%. And you look at the bottom, it's the banks, which is 16.8%. We're looking at the PSU banks down 16.8%. So if the index has to take up, deal with this resistance level, create some zone, because when prices reach an important resistance zone, a band, especially when it has run up so fast, it will spend some time, consolidate, and gain some breadth, and then break out. during which index management is very likely, which means IT, if it slows down, someone has to take up the relay race. So we can look into banks if, because that coincides pretty well with the RRG charts also. But then the caveat to this possibility is we are putting our hope on the sector which matters the most because it's got the highest weightage, but it has been one of the biggest underperformers also. So it's like the underdog. It's like you're expecting too much from a sector which did not perform at all. So time will tell what to do, but banks are still weak, be it private sector bank, except barring few gave exceptional moves like HDFC Bank. It will be very, very interesting to see when, number one, the index decides to top out and give us a short-term correction. Number two, during that corrections, which are the sectors and stocks which perform with the correction? Is it going to be the banks and the financials again? Then that's not a good sign. If we see that the sell-off, the first leg of sell-off is mainly driven by the ITs and the other pockets of the market, whereas the banks are supportive, then it will be the first sign that yes, going forward, the banks are now ready to change their role. We will see that for later. But I hope this video was useful for you. Do share your thoughts, feedback, and I'll be back this coming Friday night again with our weekly take on the market. Thank you for supporting my work, and trade well. Enjoy your weekend.